In this second video series, I'm going to be teaching you about indicators, but before then, I would like to show you the different trading hours we have in the forex market. We usually have different sessions and market sessions. Okay, so around April to October, the market changes, and around October, that's during winter, it changes as well. During summer, it changes. Okay, now these are the different trading time zones. Okay, now when we talk about the Sydney Open, this is the time the Australian market opens, and this is the time the Australian market closes. And now this is the GMT time. Okay, it opens around 10 o'clock GMT, and you know, here in Nigeria we are 1 hour ahead of GMT time. So in our time zone, Australian market opens by 11 p.m. in the night, and it closes by 8 a.m. in the morning. So this Sydney time, you would realize that that some currencies will be very volatile. Okay, and one of the very most volatile currency you're going to be seeing is the AUD. Any currency that has the AUD, look at this. This is the AUD. Okay, this is it. And then here also we have the AUD here as well. Okay, all right, here also we have the AUD. Okay, all right. So at this moment, at that time, it's going to be volatile. You would realize that the market moves almost every second. Okay, so that is one of the time zone. The next is the Tokyo Open. The Tokyo is in Japan. Okay, here in Nigeria, Japan opens by 12 midnight. That's 1 hour. GMT plus 1 is our time zone. But on GMT time, it opens 11 p.m. But here in Nigeria is 12 a.m. in the morning. Okay, and then it closes by 8 o'clock GMT. And in our time zone here in Nigeria, it closes by 9 a.m. in the morning. Now this is the London market. Okay, so here the Tokyo market, the currencies that are most affected are the JPYs. Okay, so look at NZD JPY, you see USD JPY, you see the GBP JPY, and you see the many others. Wow, market formed the gap here. Usually when market forms a gap, the gap is going to close. So I go in here, I place a buy trade. Okay, I told you about placing trades. If you want to close, you see the X here, you just click it here and then it will close. Okay, so let me just stop here for now. The market is going to close the gap. So before it closes, I pick up my little profit and I'm out of the market. So let's continue. Now the next is the London market. It opens 8 a.m. in our time and closes by 5 p.m. Okay, now in the London market, the most affected currencies are the pounds. Look at it: GBP, USD, GBP, JPY. Anything GBP becomes very volatile at those market sessions. Okay, now the next is the New York Open. New York has the US market. Look at the time it opens. It opens 12 p.m. that's 1 p.m. Nigerian time, and it closes 9 p.m. which is 10 p.m. Nigerian time. The most currency that is going to be affected when this market session opens is the USD. So here we have the Euro USD, GBP USD, we have USD JPY USD. Any currency that has USD is going to be very volatile at that period of time. Okay, now so these are the currencies. Okay, these are the currencies we are going to be talking about. Now the next I will be showing you are the indicators. Okay, the indicators and how to make good use of them. Now we have series of indicators on the market, and I'm going to start with trend. I'm going to start with the ones that I commonly use. There are several others, but in the course of this, I'm going to be using only 2 indicators for now. Okay, there will still be a special time when I'll talk about all the indicators, but for now these two are okay. The first I'm going to talk about is the moving average. Now this is the moving average. It is a trend indicator, so let's bring it into our chart. Okay, this is GBP USD. Okay, let's bring in the moving average. So you drag this and you bring it into the moving average, and then you click OK. Now you can see it comes with a red line. Can you see the red line? Look at the red line. Let's also bring it into Euro USD. In the first video I put in this trend line, so let me close them. Let me close them. Okay, let me close them. So let me bring in the moving average indicator. So this is the moving average indicator. Okay, now how do we use the moving average indicator to determine if we are to make a buy trade or we are going to make a sell trade? How do we use it? I'm going to teach you how to use it. So let me just do a snapshot of my screen, and then I will show you how you're going to use the moving average indicator. Okay, so here. Okay, now let us do. Now you see that the moving average is a red line indicator. Okay, and then look at it. Let me expand. Good. Now what does the moving average says? The moving average says that at the point of crossing the candle, a decision is to be made. The decision can either be a bullish or it can either be a bearish decision. Okay, now let's start from this very moment. Now let's follow this up. Now you can see, can you see here, it came and it touched the candle here. Can you see? Can you see? Then here it crossed the candle. Now it is at the point of crossing that a decision is made. Okay, now we are going to be doing I'm going to be teaching you about the crossing. When the candlestick crosses the red line, you should take a decision. Now let's look at the candlestick. Okay, now this is the candlestick. You see how it started from here? Okay, from here it came down. You can see it came down. You see, came down. You see, at this point it kind of crossed the red line at this circle that I put. Okay, now it crossed from top and went below it. So in this case, the moving average indicator says we should place a sell order. So at that point, Euro USD, you should come here, new order, put your volume, put your stop loss, put your take profit, and you place a sell. That's what the indicator says. Now let's continue studying the indicator. Now at this point, you see it came down. It came up again a little here. Can you see it crossed? Now it says we should buy this time around. Now when it crosses from top to the bottom of the red line, we sell. And when it crosses from under to above the red line, then we buy. So in this case, you see there's a crossing here. The moving average indicator says we should what? We should buy. So we go here and we place a buy order. Okay, now let's continue studying it. Okay, now look at it here. It came and crossed again down. You see, it says we should sell. It came and crossed up again, we buy. Can you see here? We sell. So from here to here, can you see it crossed from below? It started from this point, it went the candle and crossed from below to above the red line. So in this case, we place a buy trade. Okay, so here there's no really any visible crossing. So you see here it came crossed from above to below. Can you see here? We sell. Here it came crossed from below to above, we buy. Can you see here it crossed from above to below, we sell. Here it crossed from below to above. Can you see? We buy. Here it crossed from above to below the red line, so at the point of crossing we sell. Now here it went from below to above the red line, we buy. So here it crossed from above to below the red line, we sell. Now at this point, this is the current candle, we're going to be waiting until it crosses this line. So when it crosses above it, then we buy. That's what this indicator is saying. Okay, let's use this indicator to analyze more markets. Okay, now the next we're going to be analyzing with it is the USD CHF. Okay, now let's bring in the moving average. Let's click and drag it into the window and then click OK. All right, now look at it. So let me remove this. This is one click trading. Okay, let me screenshot this so that we can explain very well. Okay, now this is it. Now looking at this indicator window, this is what we're going to do. Okay, now we start studying the candles to the point it crossed the red line. So as from here, the candle started moving here, moving here, moving here. So you can see here there's no really any visible crossing here. The visible crossing started from this point that I cycled. So it came and crossed above it. So in this case, we buy. We buy what? USD CHF. You see here it came, no any really visible crossing, but here it came and crossed below it at this point. Can you see? It crossed from above to below it. Here we sell. Can you see? Here also there's a crossing here. We sell at this point of crossing. Okay, we see other crosses here as well. Here we buy a little here, then here we also sell. Can you see? At this point we sell here at this point as well. Okay, now it came above here, we buy, then here also we sell at this point of crossing. Then above here we buy because it's crossing from below to above, and then here we are going to be waiting for the next crossing in order to take a decision. Now this indicators helps us to know when we are supposed to buy or when we're supposed to sell. So I think having known this, or maybe let me just go to the next indicator. This is GBP USD. Okay, let's look at it carefully and see. Okay, we did Euro USD, we did USD CHF. Let's use this last one for demonstration of the indicator. This is the moving average indicator. Okay, now let's start studying the candles. Okay, now the candle at this point came and crossed and stop here. Now notice that it didn't really cross so much. That is to tell you that this indicator, even though it's good, is not very perfect. It's not 100% perfect, and that's the reason why we use a combination of indicators in order to be accurate and in order to be successful. Okay, so let's look at more. Now let's follow the candle. It moved here, the candle moved here. So the next visible crossing happened here, where it came from above the red line, it crossed below the red line. So at this point we sell. Now the next crossing happened here. You see, it came from below and crossed above it. So here we sell. Okay, then the next visible crossing is at this point. You see, it came from above to below the red line, we sell. The next visible crossing is here. It came from below to above, so in this case we buy. Okay, the next visible crossing happened here. Can you see? Now it crossed from above to below it, so here we sell, no any visible crossing until this place. It crossed from below to above the red line, so at this point we buy. The next is here, it crossed from above to below the red line, so here we sell. So now we're going to be waiting for the next crossing in order to take a decision. So I think, having studied 3 different currencies with this moving average indicator, by now you should be able to learn how to use the moving average indicator. Now the next we are going to be using is the trend indicator. So let's go to the trend indicator. Now the trend indicator we're going to be using is the MACD. This is it. Okay, so let's go and to Euro USD. Let's put in the MACD, and let's see how we can use MACD to determine when to place a buy or when to place a sell. Now this is the MACD. You see how it opened? Now note, you can change the colors, you know, just right click and go to the properties, you see, and then go to the colors here. That's all. You see, here is silver and here is red. So here, instead of silver, I can make it blue color. Okay, so here you choose a blue color. You see, it has changed to blue. Can you see? Okay, so you can also make the lines very thick. Okay, this is 2, so here you double click it and then click on 2, click OK. You see, it's thick. Okay, you can change the color to be yellow. Any color that looks good to you, you just change it, you know, and that's all. Okay, so I'm going to be leaving it the way it was. It's now up to you to choose exactly the color that suits you most and what you intend to do with it. So here I'm clicking here. All right, okay, now let me stop with this. Now look at this. Now this indicator tells us something, that one, we're going to be looking at the MACD line and we're going to be looking at the signal line. Okay, are you there? Now the stripes are the MACD line and the red color is the signal line. Okay, let me copy it out and then I do a brief demonstration of the MACD and the signal line. Okay, now this is it. Okay, this is it. All right, this is the indicator. Now take note, this is the MACD line. You see the edges of the line. Look at it, look at it, look at it, look at it. I'm following the edges. Look at it here, here with the blue line. Can you see? I'm following the edges, following the edges, following the edges. Can you see? Here, 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 here. See, I'm following the edges with the blue line. The reason is because I want to demonstrate something to you and show you something so you can understand. Okay, I'm following it up, following it up, following it up, following it up. Okay, following it up, following it up. Okay, and here it stops. Now this line I've been following up is called the MACD line, and then the red line is called the signal line. Okay, good, 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 good. Now take note, take note. MACD indicator says that anytime this MACD line crosses the signal line, then at that point you should take a decision. Take note that I'm using this indicator on 1 hour time frame here. Okay, I'm using it on 1 hour time frame. All right, you can use it on 4 hour time frame, you can use it on daily, you can use it on weekly, you can use it on monthly, so you can be able to know the direction of the trend. But on short time frames, on 1 hour, here is it. So let's begin to look at it. So at this point you can see that the MACD line crossed the red line here at this point. Can you see? I marked it. Now when it crosses the first and the second bar, then you should in this case we are going to sell, because it's crossing from above it to going below it. Now look at here, it's crossing from below to above it. In this case we buy here at this point. Can you see? Can you see? Now again, looking at this place here, it crossed from below to above the red line. In this case we buy after the crossing. We just look at the two bar, second bar after the crossing. Here it crossed from above to below the red line, so here we sell after the second crossing. Okay, so this is Euro USD. Let's go to USD CHF and use the same MACD. Look at it here, it's the same indicator. It's just that the color here is different, so you can go in, change the colors as you want. You can use this color, and then here you can make it thick. Look at it, you can make it thick. You go to the properties, and and I think that's all. So let's look at this indicator. Look at it. Anytime the MACD crosses the red line, we take a decision. So let me screenshot and explain. So in this place you can see that it crossed from here. Okay, as you can see from here, it came the edge. Can you see? It came and crossed here. After the crossing, the first and the second bar, we take a decision. And what decision are we going to take in here? We are going to buy. Why? Because it came from below the red line and crossed above it, so we buy. And that was the reason why, if you can look here, this thing, the candle here rose up from here to here. Okay, good. Now here as well, you see it crossed 1, 2. Here there's no really any visible crossing here. So let's look at the next one. From here it came below, it crossed 1 and 2. So at this point we buy. Okay, now here it came in and crossed from above to below. You see, so we have 1, 2 candles. We sell at this point. We sell at this point. Here it came again, it came from below. It came here, touched it, and crossed above it. So after this first bar, second bar, here we buy. Here from above it came, it crossed, it touched, and is going down. Can you see? After the crossing, the first bar, the second bar, here we sell. And here it crossed the red line from above. After the first, the second, we buy. So continuously. Now at this point, we are not going to take a decision according to MACD. We are going to wait for the next crossing where it is already above the red line, where it will go and cross the red line to go below the red line. So in this case we sell. Okay, so that's the MACD indicator, and that is what it says. All right, so this indicator is what we are going to be using in analyzing our market. We have plenty other indicators. We have the Shinaki, we have the Ishimoku, and many others. So the Ishimoku, by the time you bring it in here, you'll see plenty things like a net. Can you see? This is the net, this is the net, and then it comes in with its own green lines. Look at the green line and all that. Okay, so here when the net, can you see, anytime the net comes and crosses the candle, Ishimoku is saying that we should sell. You see? So, but that's Ishimoku. We have Aikinashi, we have others. Let me just briefly explain some of them, just a little. So I remove this, I remove my moving average, I remove the MACD. Okay, we have Aikinashi. Aikinashi just makes the candles to be colored. Okay, it changes. Look at them. The red is BS and the white are the bulls. Okay, that's just what it does. So anytime you see the color of a candle making reddish, you know that the market is a bearish market, is a selling market. You sell, and that's what the indicator is talking about here. So let me delete the indicator. Okay, we have a lot of them. We have a lot of them here. So the next I will be talking about in the video will be trends, how to identify trends and how to spot trends that are genuine and trends that are fake.